Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The opening bell, the markets have opened so flat. Okay, now it's just getting into a little bit of red. The Nifty Bank, that is, it's down about 0.2. Okay, now the Sensex and the Nifty are also mildly red to flat. It's actually flat as flat can get. I mean, maybe we should wait for the market to settle down. Now the Nifty Bank is taking it out, so looks like yesterday's green was probably propping up for the weekly futures expiry. At the moment, it's starting rather red, about 0.2 to 0.25% lower. And what's pulling it down is ICICI, Kotak Mahindra Bank, Axis Bank, all three of them in the red, and therefore pulling the Nifty Bank. Actually, even IndusInd Bank is in the red, not by a whole lot. Bharti Infratel also has seen profit taking. So those are the main culprits. Axis, ICICI, Kotak Bank. And then, of course, even the IT stocks are not doing too well. Tech Mahindra, Infosys are also in the red. What's in the green? Bharti Airtel, Zee, Vedanta, HDFC, Bajaj Finance, Dr. Reddy's. Actually, you know, nothing is outstanding red or outstandingly in the green. Everything is so terribly middling, except for the Nifty Bank getting pulled down by the private sector banks. But I think it's in the mid-caps where there's a lot of stories.
Yes, there is. The mid-cap index by itself is flat with a bit of a negative bias. The market breadth is split right down the middle. But a lot of stocks attracting, sellers now. Hexaware is down almost about 5% post its numbers. But remember, it's still the strongest stock in the mid-cap IT space. It's up 25% for the year. You have JSW Energy that reported a big loss this time around. So that stock is down almost about 5.5%. Castrol reported weak set of numbers, below street estimates. That's down almost about 4.5%. And you have a couple of others like HCC that continue to be under pressure. So keep an eye out on that. Some of these other names, Sun Pharma is down about 1%. We were talking about that earlier. And a couple of these Adani Group stocks, Adani Power, are just a tad bit in the red right now. On the upside, PC Jewelers is making a move. It's up almost about 6%. Bhushan Steel is up almost about 5%. Ruchi Soya is in the news. It's up almost about 4%. Bharti Airtel is stock of selling off the Africa business. That's actually up about 2.5% right now. Jet Airways is recovering. It's up 1.5% after the fall that we saw yesterday. And some good numbers coming in from the likes of Emami, Thirumalai, Adani Ports. Trent was not too bad. So all of these stocks are actually trading in the green. Okay, Trent is marginally in the red. PNB Housing, by the way, is also trading in the red right now. So it's largely flat, you'd have to say, with a bit of a negative bias for starters.
Yeah, for starters, it looks like a bit of a trend in Hexaware for sure. The mid-cap IT had a big rally, and of course that's now seeing correction. So 6% now gone on Hexaware is what we have. We've seen what happened with HCL Tech. I mean, if you miss in IT, the margin of error is not too strong because the rally has been very strong. Apart from that, of course, it's quite an okay market right now, still holding yesterday's low. Sudarshan, your thoughts on market opening and any interesting stock idea?
Yeah, well, the markets are opening on the weaker side. So I would expect 650 to break on the downside sometime during the day. And that would add an element of extra bearishness. There are two short selling ideas and both are only intraday. Do not carry them forward. Infosys and HCL Tech. IT could be having a bad day today.
Okay, yes, Rajat warned us with an IT short strategy that he had. Rahul, you've seen the opening. Would you trade the indexes? And if you do, how?
Well, on the index, particularly, I still believe it's going to be a little tepid. I don't really expect any great movement. Again, 10,700, 720. That's the number I'd watch for. Unless we really break that out, nothing fierce coming on the upside for me. But at the same time, when we look at some stock specifics, I think one that, of course, catches the eye is Bharti Airtel. There's been a lot of volume that's been kicking in into the stock. I mean, I'm continuously, having the stock come up on my radar, and I really think that the stock, once it gets past a level like 412, 413, we might see a significant rally come in. So even at these levels, if someone's a bit aggressive, the stock's holding that 200-day moving average, buying with a 400 odd stop loss or 397 to be more precise, that could be an interesting aggressive play.
Okay, well, Hexaware is still your stock of the moment. Now, remember, the growth for the company that they're expecting going ahead is still quite strong. I mean, they're holding on to their 10 to 12% growth guidance, but it's just that on the operational front, they're a bit concerned about margins. So, Darshan, this stock has been a very strong performer. You did mention that IT could be under pressure, but for long-term investors, does it make sense to buy Hexaware now, or would you stay away?
No, you have to wait. IT is probably starting a correction, the entire sector. So even for long-term investors, you'll probably get it much lower.
Okay, actually, that was going to be my question. I'm like extending Sonia's question, Sudarshan. Since IT is poised to give you a correction, which stock looks attractive to you in the correction?
I'm assuming that which stocks are suitable
Attractive for a
short
long,
selling
yeah, for a long trade.
Attractive for a long trade.
Yes.
Oh, TCS is the most attractive, but since the correction is probably just going to start, I think we'll get TCS also at lower levels soon enough.
Okay, Hexaware is now extending losses, so that one is now your top F&O loser at this point in time. Apart from HCC, of course, that's of course a penny stock now. Castrol is down 5% by the way. So that's been the problem with Castrol. Somehow earnings has always been an issue with Castrol, even if overall it looks good. Mehrbun, thoughts on Castrol?
I think I agree fully with you. I think complete disappointment as far as numbers go, and it's not happened this time. It's happening for the last few quarters. Who do you think is going in favor of Castrol as MNC? Solid brand, and even valuation-wise, not many reasons to complain. So it's an enigma. The enigma is that if there are better opportunities, should I continue to hold on to Castrol? It's just doing nothing. Then you say, oh, why should I sell it off? The stock is not expensive by any standard. So that's the problem with Castrol. I know a lot of investors holding on to it, and they hope that, okay, the valuation is attractive. Ultimately, it goes on giving me a bonus issue off and on. But at the end of it all, as a performer, I think I would say to call it a performer would be an exaggeration right now.
Yeah,
I think the stock has just
all the results numbers, yeah, just look at the JSW Energy, HCC, of course, Castrol, Hexaware.
Yeah.
The overnight results have not added to the market's strength at all. Well, infra has never been anybody's favorite for the last 5 years, Mehrbun, but all these JSW Energies, the HCCs, no buys in distress anyway, Adani Ports.
Adani Ports is one thing which I was impressed with, the fact that the cash flow has improved and the debt is coming down. So I certainly see better days ahead for Adani Ports. The question is, should I buy it at this price? I personally believe that the numbers should improve going further, and so should the stock. Coming to SCC, honestly, no comment. Never tracked the stock. I know that the subsidiaries are in trouble. I know the company itself is in trouble financially, liquidity-wise, everything. So honestly, not too many reasons to comment on such type of stocks. And I think there are times you have to accept that when the market shows signs of some nervousness here and there, they are the first stocks to stumble fast.
8% now gone on Hexaware, so that, I mean, the margin of error is not there. And of course, there are others as well. Interglobe, by the way, is again making lows of the morning along with Jet Airways. So that decline in aviation stocks is well and truly continuing. And what a fall it's been for Interglobe now. In 3 days, almost 350 rupees gone. And Jet Airways as well has been a big decline on that one too.
Also, VST Tillers, we were talking about how the numbers are really weak this time around. That stock is down almost about 4% and the management is choosing not to speak about their numbers this time around. So we're not getting any clarity on why the sales have fallen so much. But Sudarshan, if you've tracked this one, it's been a big multi-bagger in the past. Anything that you would advise here?
No, I don't have any advice on VST Tillers because in any case, Escorts is a far better option in that sector. So Escorts and M&M are better buying opportunities.
Okay. Well, the other stock I wanted to ask you was Varun Beverages. That's the only one which after the results has shown a bright 3.3% gain. We did speak with the management and sounded quite positive, the management. Any technical view on that, Rahul? Do you track Varun Beverages?
Yes, I do. I'm still positive on Varun Beverages. I still feel there's a good upside, particularly, I mean, we don't have a ton of historical data on the stock, obviously, but going forward, I think keep a 615 stop loss, continue to hold. If you're looking at even a new entrant, I think it's a good stock to have in the portfolio. I think near term, we'd be moving to about 770 to 780. That would be my target. So I'd continue to buy into that.
Okay. Well, Rajat Bose is still with us. Okay, we don't have Rajat with us. Okay.
Well,
okay, Rajat, sorry. Anything on your radar now that you can trade?
Well, I would say that you have already discussed Varun Beverages, and apart from that, what you can do is you can actually look at Britannia. Britannia is showing some signs of moving up. Britannia and both Voltas, these two are looking quite good. Voltas I would trade with the day's low as stop loss and expect 627 to about 628 on the upside for its May futures. That's one stock that can actually give some kind of pullback rally.
Okay. By the way, Relcom is making highs of the morning in a weak market, so that's also an interesting stock. I don't know if there's any news development on that, but that one's making highs right now. Godrej is making highs of the day. Godrej Industries, that is. I think Godrej Properties comes out with numbers of course. Today, yeah. And Godrej Industries is the holding company, so that's the one which is looking quite interesting. The market at the low point now, 10,650 on the Nifty, so very close to that support mark. Let's see if that sustains or not.
Okay. Mehraboon, I just wanted your thoughts on Bharti. I mean, today it's up almost about 2.5%. There's some talk that they may look to deleverage, selling their, Africa business stake, etc. You've not been a fan of telecom stocks in the recent past, but still the same?
I would say the only thing going in favor of Bharti right now is become relatively underowned, and valuation-wise, one can possibly try and defend for many other reasons. I know a lot of people who are positive on this stock, people whose opinion I otherwise respect, and I had a lot of arguments with them. But even right now at this price, in an environment in which uncertainty could surface, should I go into something like a defensive like Bharti? My answer would still be a distinct no, not enthused at all.
All right, gentlemen, thanks a lot for taking us through the market opening. Let's now invite our market master for the day, Ratnesh Kumar, MD and CEO of Bobcaps, is with us. Ratnesh, good morning. Your thoughts on the kind of volatility we have seen of late, a big recovery in the month of April, but in May we haven't started well, especially in the mid caps.
Yeah, what you're actually seeing right now are that you have domestic flows which are steady, but actually the global flows are volatile and more so negative for the emerging markets because of the macro news flow that you are having on the trade side, on oil, and all of those things are causing the volatility. And naturally, you also have the quarterly results season underway, so that is also adding to the volatility. But basically, market is going through a consolidation phase right now, and within that, with weaker foreign flows, the volatility is pretty much to be expected.
Okay, well, good morning to you, Ratnesh. The market had moved distinctly towards the IT space. Do you think there's more juice? Over the past 3-4 days, we've seen some correction. But will that be the market leader for the year, for instance?
I don't think IT will be the market leader for the year. For the time being, while you have, some of the news flow headwinds which are there, within the domestic sectors and on the earnings side, I think you've had the steady aspect of IT win out in the near term, but I think for the year as a whole, it is still going to be the play for the market, which is going to be on domestic cyclical sectors, domestic growth recovery, and those kind of factors.
So when you say domestic cyclical sectors and growth recovery, how are you positioned in names like FMCG? Because we've seen good set of numbers come in from a lot of companies this quarter, the likes of Imami, etc. Do you like this space?
So on the consumers, valuation is certainly a hurdle, has always been a hurdle. So in there, I think the mid-cap names are probably better positioned. But on the domestic cyclical side, what I would play with will be automobiles, would be cement, would be construction. Those are the areas I think which are better plays on the domestic like side of the story picking up as the year progresses.
Okay, Ratnesh, what about the finance space? We saw some fabulous numbers from the NBFC companies. Are they still buys, or is this rise in yields making you nervous about whether they'll be able to repeat the performance?
So I'm not that bullish on NBFCs simply because I think what what you are going to see in a rising interest rate environment, it'll be tougher for them to take market share away from banks, which will be sort of better competition going ahead, especially the private sector banks. And on the valuation side also, NBFCs are quite stretched, and most of them actually haven't seen a down cycle in terms of the asset side. So that remains to be seen in terms of how they are positioned for that. So at this point in time, I'm not that positive on NBFCs within the financials. I think the retail focused financials on the bank side are better positioned at this point in time.
Okay. I don't know what your stance is on aviation, but at this point in time, the yields are under a lot of pressure because of, pricing wars, etc. Do you think you can find an opportunity and buy into any of aviation stocks here?
So I have, always, not liked aviation for the very reasons that when I'm investing in the Indian market, I'm looking at more secular, growth stories. In aviation, it's a capital-intensive, highly competitive industry with the plays from oil, etc., coming in causing volatility. And so you're seeing numbers again not being good on the aviation. So I don't like aviation right now. I didn't like them before, and I think they're better, secular growth story kind of sectors which are there to be played in the Indian market.
What are these secular stories?
Lata, before that, Hexaware is now on that 10% temporary freeze, so it's a big decline now on that stock.
That's a shocker, isn't it?
I mean, it's all about, running into the numbers and with the expectations. So that's, I think, what's doing it in right now.
Okay, actually, yeah, even NIIT Tech is now following suit. The numbers come today. We will give you a preview of the numbers. Yeah. But market is already nervous after the way in which Hexaware has been taken to task for what I would consider a very, very minor disappointment. It wasn't all-round disappointment. It wasn't, I would think, not as much of a disappointing as HCL Tech.
In fact, if anything, they have a 10 to 12% growth, right? Of course, the stock has run up a lot, so maybe it's profit-taking.
That's the point.
It's trading at 25 times. Yeah. It had no business doing that, and I'm absolutely not surprised one bit that Hexaware is down 10%, and I was not surprised one bit that HCL Tech fell the way it did. It's about market positioning. For all of course, because it's been a strong stock at lower level, perhaps there's some buying. But the first trade is to normally sell these stocks because you've built in a moon, and a lot of these stocks have also gone up on M&A buzz. So that's also one reason that you've seen perhaps some of these stocks correct after the kind of numbers that we have seen.
Okay, economy facing Ratnesh, we were I think talking about secular growth stories. Where do you find them?
So there are very many segments. I think autos, as I mentioned, is certainly one of them. They also benefit from the rural side as well as the overall consumption recovery, which is going to be there. Also, you can look at in the homemaking space, be it consumer durables, appliances, electrical goods. Those kind of businesses are in a secular growth phase, and that growth will continue for some time, and good companies there are able to deliver 15–20% type of growth. So I would be focused there from a secular growth perspective.
Okay. Today even PNB Housing has not been received very well.
Yes. I wanted to get your thoughts in. We did discuss the IT space, Ratnesh, but for some of these companies like Hexaware, the only fault of theirs is that the stock has run up a whole lot and valuations are demanding. What do you do here? Do you sort of use this as an opportunity to buy, or because valuations are stretched, maybe you look for other opportunities in this space?
So in IT, I think it is going to outperform probably the market, in the near term, let's say 2 to 3 months, while the other sectors come back up on the domestic side. So within there, I think the focus should still be on the large cap side of things, because overall growth is steady, and the risks are lesser on the large cap names during this near-term phase of outperformance, which the IT is going to deliver over the next quarter or so.
Okay. Finally, would you take a look in any of the corporate banks? The expectation is that they've all flushed out the dirt or will flush out shortly. Is there any buying opportunity there?
So I think it is probably another quarter or so to wait because of the revised guidelines. You will have fourth quarter numbers which could be quite negative, and thereafter it might be a good time to look at the corporate banks, especially if there are a few NCLT cases get positive resolution. So I think it is probably another wait for another quarter or so. At this point in time, while I think the retail focused banks still continue to grow well, and at present the focus will be on the retail focused banks.
All right, Ratish, we leave it at that. Thanks so much for joining us and giving us your views. So that's the word coming in on the markets, which, by the way, is now has a small bit of red going for itself. Nothing major to worry about, but Hexaware really is the stock of the moment. Remember, Kotak has downgraded Hexaware to a sell from a reduce, and they've cut their target price a lot. Their key observation as well is that the stock has run up a lot, 25% in the past 3 months, and post that, a lot of the good news perhaps is already in the price and some amount of stress coming in on margins as well. But let's do one thing. Let's talk about Castrol, because Castrol is one more company that is under pressure right now. The Q1 earnings failed to impress. Lower volume growth led to a weak top-line growth, and a rise in input costs impacted margins. Omer Dorman, the MD of Castrol, joins us now to talk about that. Omer, thanks so much for joining us. You know, we were discussing this the last quarter as well, as to how the volumes are just not picking up despite some of the sectors that you operate in doing so well, like commercial vehicles. What's going wrong? And this time, the volume growth of just 2.6% is something that has disappointed the street.
Hi, good morning. It's great to be on your program. First of all, we're really proud of what we've announced as Q1 results, because this is a continuation of our growth strategy in line with our strategy. And in the last 9 quarters, apart from the second quarter of 2017, because of the GST transition, we've been consistently growing. And if you look at the Q1 results, actually the volume growth is 5%. On an underlying basis, because there was a one-off last year.
Okay.
And again, if you look at the income operating profit, it's 5% from operations, as well as the both profit above and below tax is 5% growth. So I think in the quarter, we are really proud because we've seen a 3% input cost increase, and we were able to recover that and still deliver growth in terms of volume as well as the bottom line. Now, of course, we also expect the growth will continue to pick up in the rest of the year.
So when you talk about this 3% input cost increase in this quarter, you did take a commensurate price hike in the quarter gone by, right? And will you be taking any more hikes in prices to pass on the oil cost?
So we saw, as I said, we saw a 3% increase in our input cost from Q4 onwards, and as we discussed before, this has been going on for the last 15 months actually. And if you look at the last 15 months, we've recovered 150 crores of input cost increase. So this is quite a significant cost increase.
Is the average?
And we believe that with crude around.
No, sorry, I was wanting to know your average realizations this quarter.
So average realization, we took a price increase in the range of 2 to 4%, depending on the product category and depending on the channel. We also run cost efficiency programs. So we do selective response. And of course, we expect with the crude hovering around 70 plus, and the rupee appreciating against dollar in the last couple of months, we expect the volatility to continue. And we will respond accordingly in terms of whether it's going to be cost efficiencies, whether it's price increases, whether it's going to be review of our trade schemes. But, so we will continue responding like we did in the past.
Sure. Even this, volume growth of 5% is much lower than what you have done in the past and much lower than what the industry has done. I mean, the industry that you operate in, commercial vehicles, even personal lubricants, has grown at high double digits as well. You think you can do better in the next few quarters on the volume front?
So I think 5% in a quarter where we seen a price increase, and we usually lead the price increase in the marketplace, and where we've seen our premium go higher. I think 5% is quite a respectable, and we're really happy with the volume increase. Now, we've seen some pressure in industrial volumes, and that's usually the low end of our spectrum of our product range. And we're responding to that. And we've seen the wind sector being under pressure in our industrial portfolio. But apart from that, I think we are responding to where we see that we can increase the volumes even higher. The good news is the commercial volumes are back, and we've seen some respectable growth coming from the commercial sector. And we're also quite pleased because in the first quarter we've taken a number of initiatives in terms of new product launches, whether it's Castrol Magnatec, Castrol Turbomax, Castrol CRB Turbomax. We've launched into the market, and for the first time in the history of Castrol, we're going to have a significant investment, advertising spend behind these 3 products at the same time. We're going to be on TV. So these are all the initiatives that we've taken, which will fuel further growth.
Okay, so what will be the advertising as a percentage of sales?
Let me say this, quarter versus last quarter, it's a 20% increase. So it's a significant increase, and we will continue spending and investing behind brands like we did consistently.
Okay. We'll leave it at that. Thank you very much, Omar, for joining us with those details about Castrol. So Castrol says pleased with the 5% revenue volume growth. Market not that pleased. The stock is down 5%. The market is displeased with quite a few numbers today, actually, and Hexaware heads that list. As, of course, Anuj has been explaining, the stock already is trading at very high valuations, and so there was really no scope for disappointment. Reema is here to tell us how the analyst community have taken the numbers. Tell us, Reema.
Well, Kotak has downgraded the stock to a sell from a reduced rating. They also highlight how the stock has seen a 23% run-up in the stock price in the last 3 months. And they're surprised that the company has not changed its full-year guidance, which stands at 10 to 12% despite a significant Q1 beat in the revenues. That, they say, could be attributed to some amount of conservatism from the top management. They also say that the stock is expensive. It's trading at 21 times calendar year 19 earnings. Nomura says that growth was ahead of expectations, but margins were lower. They have a reduced rating on the stock. Again, it's a run-up in the stock, lack of a guidance increase. Despite the Q1 beat, they see moderation in the company's margins in this year, and coupled with full valuations will put pressure on the stock, which is why they maintain a reduced rating. So it's a combination of run-up, high valuations, no upgrade by the company in their top line despite a good quarter. Those are the key reasons for the disappointment from the analyst community.
Okay, thanks a lot for that, Reema. So a lot of stocks under pressure. And by the way, Castrol is falling some more after the management said that the advertising spends will continue to be on the upside. And that's something to factor into the margins. Let's take a short break. But on the other side, we will return with more earnings reactions. Dinanath Dubhashi, the MD and CEO of L&T Finance Holdings, will join in. And in a bit, we'll touch base with VD Maheskar, the Chairman and Managing Director of IRB Infra.